Right now, you have December 80 higher at 74.55, and February gaining 42 cents. It's at 82.90 per hundredweight. The front months, in other words, the December contract is now leading the charge and really gaining on the spread against the deferred contracts out there. Oliver, what does that mean?
Well, the February contract is where majority of the liquidity is. December's running against the shot clock a little bit. So February is where we're keeping a close eye on, and we're on the verge of another technical breakout. If we can get out above last week's highs, I think this market has the potential to continue upwards and potentially retest the highs that we saw back in September. And going back to July as well, which comes in above that 88 handle. As far as the fund positioning goes, the funds are pretty aggressively long. They're long about 63,000 contracts, but there is room to add there. So if we can continue to see fundamentals firm up and give us that technical breakout, we could retest those highs. And speaking of fund positions, that's something we've been talking about for what seems like a lifetime now in the live cattle complex, is that the funds have been reluctant to be excited about live cattle. But over the last month or so, we've started to see the fundamentals firm up a little bit. The cash market's been friendly. We got cattle on free report last week that was relatively neutral. And now we're getting a technical breakout to the upside, which could potentially open the door for a retest of those contract highs, which is above that 140 handle for the February futures.
All right, a quick check of our crude oil trade. And right now in West Texas Intermediate crude, the January up 79 cents at 76.73 per barrel after it had been lower around the time we opened up the grain trade. Interesting stuff. Thanks, Oliver, for talking with us. Oliver Sloup of Blue Line Futures. Janet, back to you.